So today we're going to do a little bit of Homeowner 101. So you've already bought the house, you own the house now, congratulations. And now you just got a bill in the mail and it says escrow shortage. And you're like, what is an escrow shortage? Okay, let's talk about it. So if you have an impound account, or escrow account as we like to call it, what that is it's when taxes and insurance are part of your monthly payment, okay? If you have one of those accounts, it's not uncommon for you sometimes to get a check back that says, oh, you have too much money in your escrow account. And then you may get something like a bill that says, oh, your escrow account's too low. We need to do it like, apply it to your payment, or you need to pay us the difference right now, like all these different options, right? And you're like, but I've been paying my bill every month. Like, what's the deal? What gives? Okay, so here's the deal. So two big things come into play. The first thing is that when you first buy a house, there's a very good chance that the county you're in will not recognize that or assess the property to the new purchase price. In some places, it's up to 2 years. Yeah. So as the lender, I could say, okay, your taxes are going to be $600 a month approximately, right? Because we don't set that. That's set by the county. So we're guessing and we're saying $600 based on your purchase price. And then the county doesn't recognize that you've owned that house for 2 years. So the tax bills are still coming out at the old owner's amount, which maybe they bought it in the 50s, so it's like $100. So you get this big fat check back from your escrow account. Your payment goes down because the government requires escrow accounts do not collect more money than they need to. And if the tax bill's only coming in at a couple $100 and they've got $4,000 in the escrow account, they've got to return that to you. And they have to update the payment to reflect that. Now, what sucks, sorry, there's not a better word for it, it's true, it sucks, is that most people get the money back. They get they're like, oh, my payment went down, cool. Yeah, it's not gonna stay that way. What's gonna happen is as soon as the county assesses and goes, oh yeah, he's the owner now, we want all that money back. They go back in time. It's not from the moment they get around to assessing it, it's from when you purchase the house. So that can lead to people getting a check back, a lower payment, and then they get this big bill that says, hey, you didn't pay enough. And they're like, but you told me, yeah. And it's because of, how long it can take a county to assess that you're the new owner and all the laws around impound/escrow accounts. It's the same thing, so I'm going to use it interchangeably. So that's one way that you'll see that happen. So it's not the lender trying to rip you off. It's literally because of the regulations surrounding how much money you can have in those accounts. Like, we don't even have the ability to be like, oh, it's going to be more though, so just keep it. You can't. It's not the way it's done. Like, there are serious rules about this, and lenders can be fined so much money that they are going to follow the rule to the T. So if you ever get a check back from your escrow/impound account, put it in your bank and do not touch it. Do not spend it. If your payment goes down a lot more than what your lender originally quoted, save the difference in the bank because they're going to come back for it. So just save the difference, okay? Worst case scenario, you saved money. Cool. Okay, like, it's not a bad thing. You just want to make sure you're prepared for this because people get sideswiped by this all the time. Okay, the other way you can end up with an escrow shortage. So if your homeowner's insurance goes up, if your property taxes go up, the lender doesn't get notified immediately. It could be a whole billing cycle or half a billing cycle before they find out. Like, let's take homeowners insurance, for example. Let's say when you bought your house, it was $1,000, but you live somewhere in California that's constantly on fire. We all do. And now your insurance is $1,200. Well, if they were only collecting, assuming that it's going to be $1,000 next year, and now it's $1,200, how are they supposed to make that up? The last bill they had was $1,000, so they collected money from you every month based off of that $1,000, and they didn't know the premium was going to go up until a month before it was due. So you've got an escrow shortage. So you're having to pay the difference between what the last bill was and the increased bill is. Okay, so when you look at that, a lot of times people are like, "This lender's trying to rip me off." No, they're not. They're actually just following the rules that go with impound accounts. And we can't just collect money because we think maybe your bill will go up or the taxes haven't been assessed yet. We have to follow those rules. So with the insurance piece, I know it's really tough to know where your insurance is going to go. I would suggest that if you have an impound account, and you're in an area where you can easily get insurance, there's certain parts around the country where there's like one insurance provider that's going to do your insurance. So this makes zero sense. But if you're in an area where it's easy to get insurance, I would recommend that you shop your insurance every single year. Yeah, every single year. And the reason is because what I have seen, and from my own personal experience, is that if you don't, it just keeps on going up. Yeah, until you go, until you go, you know, I had this with my first house where I was like, gosh, it just keeps on going up. And then I shopped them and it was so much lower. And then all of a sudden they're like, oh, we're so sorry. Actually, it should be this. And it's like, wow, you guys were totally trying to rip me off and you got caught and now you're trying to get me back. Like, you're sleazy. So I just wanted to do the quick video about escrow shortages because it's something where I see a lot of frustration and anger about. And if you know going into it what to expect, you'll just know, like, okay, yeah, they just lowered my, you know, if you have an $800,000 house and you're in Texas and the property taxes, you know, you get a bill and it's $100, that's not right. That's not right. So be aware, okay? Just assuming the lender's always gonna do everything the way that, you know, you want it to be done is wrong. We have so many rules and regulations that we have to follow. So I hope this has been helpful. If you have any questions, comments, always reach out to me. I love helping people, especially when they're freaking out. It's like my favorite. Thanks for watching.